What's going on, guys? So we're going to be going over the trades today. They were just swing trades, one being Disney, the other one being Apple. So these were really nice trades because Apple's been in a distributive type of sequence ever since pretty much over here, right? We had these relative equal highs off of the all-time high, this really nice resistance, and then from there, what happened was we did break out. Really nice volume behind the breakout. However, we had a big wick up here on increasing volume, and then the volume kind of dried up. We got this OPEX volume and then we started to float our way higher on little to no volume, right? And then volume started to really dry up here with gaps. Okay, so we had gaps up and then gaps down. And then we bled right beneath those gaps, never tested back fully into that gap or got a constructive lower high. And then from there, what happened was we kind of just, like I said, held the gap and found capitulation the next following day. So whenever we take a look at this and we're like, oh my gosh, okay, what's going on here? This was a really extensive kind of move higher, right? I mean, we got a shallow little flag and then we moved our ways higher and it looked like there was almost an absent seller. That's obviously a red flag in any sort of large cap name, especially whenever there's not a lot of volume behind anything. You go over to JPM, something similar here, how you float up above the previous all-time high with kind of like a distributive looking chart beforehand. This is a much cleaner of a schematic, but Apple just offered a really nice entry, right? So we got 9 days of consolidation after we got this massive footprint candle within the market. It gapped down and then accumulated everything off of this first initial retest because this is a breakout with no retest. Okay, so this is a big gap down. There's a lot of volume pouring into the sell side because we did gap down heavily. And then Apple was just relatively weak ever since this whole market recovery, right? You think about this from all the way down here at the closing, at the opening print of Apple into the rally higher, or even just a break of the footprint candle itself, right? Apple only had an 8% upside move while you look at some of these other ones, and you can see how this one had a really nice one. 26%. A lot of these names had really, really nice moves. And Apple was kind of just lagging a little bit behind in terms of sell side and in terms of buy side, right? Like we're thinking about this whole move higher and we're like, they didn't make a lot of progression here. And all this is really doing is taking out a lot of buy side liquidity from the upside. So you have to think about like where a lot of stops are going to be sitting at. They're going to be sitting kind of like above this wick. They're going to be sitting within this general range where there's heavier sell side liquidity sitting right in this bear gap. Okay, so we got the 9 day consolidation break on the daily. And then what happens after that consolidation break? We actually print a shooting star on increased volume. And then from there, what happened is we put in a low day and a retest. That retest was nothing. Okay, so you guys can kind of see how it stalled out off of the opening range, and then we started to give up the trading day low as well as the closing print, opening print, and then we closed beneath the opening print with a red shooting star on the daily. The next following day, what happened was we capitulated right through the level, and when you go back into the daily chart, you're going to be able to see how we're losing a big support here, right? So this was a 9 day trading day support that was created off of what this gap was pretty much, which is right over here. Okay, so you can kind of just take like something like this, right? Which is like the more local support, the more recent support. And then from there, what happened was we got the retest, okay? So we got the retest right over here. Let's go into the 15-minute and talk about what the retest kind of brought us and kind of what it was looking like in the price action following up into the gap down. Okay, so we have this massive hourly resistance or support turn resistance. Okay, and then we got a lower high on the daily. Really wasn't anything gaps wise to fill. It was just a simple retest, right? The next following day, what happened was we bled down and then we started to establish a support off of these bull gaps beneath us, right? So this is a bull gap. The next following day we gapped up into here and we never got a retest into the gap itself. What we did was just kind of climb our way higher, as you could see. So this is the bottom of the gap. You come over here and this is where they were trying to create a support off of. Okay, so we have a support on the bottom range, and then we have SR flip on the top range. But if you're looking at the top range in comparison to the bottom range, you're looking at the volume profile here, you're looking at the volume patterns on the daily. What is this really revealing to us? Well, it's revealing to us that we got our lower high on the daily because this is a simple retest, and then we sold, and then this 4 days of price action was making little to no moves anywhere with volume really drying up back into the range, right? So I'm just looking for a smaller time frame, lower high from this high, 224 being the risk. Got a nice little move down into like 222.50 for the close, and then we got the breakdown. Now, what did I see live? I saw a few things live, and one of them being look at the general action leading up into this spot, right into this pivot, right? This is a big, big, big pivot. We failed it twice. And then what happened was the distribution actually started right off of the open on Wednesday. Once we started to claim above this wick, that seller kind of just kept tapping into the name. We weren't really moving anywhere. You go take a look over at something like QQQ. What we're doing is we're filling this bear gap from up here. You go take a look at Apple. It's a really, really, really nice risk to reward. If you want to talk about like consolidation, this was all a range where there was not enough of a buyer to develop structure for a higher low and then a push higher, right? Because we have distribution from the upper ranges of the chart, and then we retest and fail, and then we fail into this bull gap. But what do we not find when we fail into these ranges? We didn't find any sort of big time buyer. Okay, so whenever you think about this and you think about the move higher within tech from over here on Wednesday into Thursday into Friday, that was a relatively decent move within the actual index, right? You take a look at the index here, guys. From the Wednesday low into the Friday high, this moved 5.6%. Apple's a lot more volatile than AIM. It should be making bigger moves than the index itself. This from the Wednesday low to the high was only 2.82%. You go take a look at some of these other tech names. Much, much, much stronger, finding much stronger moves. Obviously, some of them are a lot more volatile, but Apple was one of the really, definitely one of the weaker names within tech, right? And we never truly got that mark down that we were looking for. This is all one daily lower high, and then we're trading lower time frame lower highs on retests back into the range, right? So I was looking for this massive gap level to be lost, which was where the support was actually established off of, was the gap that was kind of sitting from here. You could take the closing print of the range, which was actually the Thursday low that it started to hold off of. But you take a look at the Thursday low and it just looks like micro distribution that's leading up all the way into a simple retest, right? You're taking a look at like this wick, and then you take a look at like the claim of the wick, and it never had any solid progression and foundation and structure that was strong enough, and no buyer strong enough within here to even move our way higher, right? So what's likely the scenario here? It's going to be a gap down, a retest into a more liquid range, right? You could take a look at like what looks to be maybe the support breakdown failure. You could take the top of the footprint candle. You could take this general range, make that your target. And this is kind of what the trade criteria was looking like. Short off of 224, risk above 224. I would say $1.50 max of risk there. And then it started to close beneath these wicks on the daily, right? So, I mean, I guess you can move the risk down a little bit more now again. And then even if your entry is still beneath that, guys, that is a 5.5 R trade. Really, really, really nice trade. Not really much to it. Other than it being extremely simple. Let's go over it into SQ now. SQ is a really nice one because this is looking like an accumulation. You have a big support sitting right over here. What happened was we actually got the support breakdown failure, and then we got a nice, beautiful higher low on the daily chart. If you want to pull fibs from the low to the high itself, this is right off the 618 and the 60 psych. and then you take a look at where the initial accumulation, preliminary accumulation level is sitting at, it's right over here, right? And then what happened was we moved our way lower. That move lower was a failure. If you want to take a look at higher time frame fibs, go ahead. And then once we got the failure and then the recovery, this was a really nice retest back into the range with a nice buyer stepping in midweek and then kind of keeping price back up above that level towards the end of the week. So whenever we're looking at this and we're saying, oh my gosh, what do we do here? Really nice increased volume reversal looking candle here. Largest volume that we had ever since down here. What we can conclude is that a lot of traders are underwater that went short over here. So whenever you get the retest back into the range and they were short on the breakdown and now they're looking to mitigate their positions, what they would do would be covering their shorts here or obviously laying off the pressure. And then all this really did, guys, was here was a support. It climbed back above into the support. Go take a look at the 15-minute. Got a really nice intraday 618 higher low entry right off this 15-minute hammer. If you want to take a look at like the fibs from low to high, really nice entry right over here. And then that's whenever it started to climb its way higher. Now getting above this resistance. And then it got the retest and then kind of grinded its way back. So this was a really nice trade. I was long here, was losing, got a really nice candle right off of like 1035. Caught $1.72 at most on it. Ran about 45%. Not anything crazy, not anything horrible. This was a really nice trade though. Big underperformer, first of all. Second of all, we have a very liquid candle sitting right over here. This is the earnings candle itself. This is the earnings candle high. This is the gap down level itself. What do we get right off of this big time gap, guys? What do we get right off of it? Here is the gap. We got a hammer candle right off of the earnings candle itself for a higher low. That higher low also coming off of the bottom of where the accumulation started, where we left behind a bull gap. And this is all stemming from the earnings gap of 2023, right? So there's a really nice confluence of ranges on the chart where an accumulation would likely build. Once I got the hammer candle, that's whenever I was looking at the opening print of the hammer candle or the closing print, just the body of the hammer itself to be something that is defended. You could take a look at like a little trend line higher low break, and then you go into your 15. Got a really nice add opportunity over here on Thursday of last week, and then I just rode these calls out all the way up into these upper ranges where the gaps need to be filled at. Another really nice example on a chart of where there is not enough strength from a seller within this general range to be able to do something like this. Therefore, what you have to do is you get a hammer candle, you get a nice higher low, take your entry, target the gaps above you where there's going to be a seller, right? And then it could eventually be all the way up into here. That's why the trade was so nice because that really maximizes the risk to reward. Long side trade, stop beneath this general range, probably about a 50-cent stop, a target into 92 or 93 bucks. It's about a 7 or 8 hour trade. And I did talk about this on Twitter being a really nice setup a few times. Let me go take a look at this. Yeah, so here was a tweet here, guys. Targeting upper gaps above us. I want to see 92 to 93 here relatively soon. It swung the Apple short, and yeah, I was going for the full risk to reward on the full reward on the trade. So that would be it, guys. If anybody has any questions, please let me know. I had to keep this one a little bit shorter because I got some stuff to do tonight, but